Hi guys, welcome back. This is Ryan, and today I thought I'd just do a bit of a weekly update on Bitcoin because really the last time I made an update on Bitcoin was on my Twitter around these levels, just outlining that we was coming into a bit of a trend line retest area and that we need to watch out for this move down. And we've got the move down despite a bit of a short-term rally to the upside. I am now anticipating more movement after we come in and fill these bearish candles to the downside. So just going to share with you my tweet that I put out about 4 days ago, just so you can see what I was saying. Then we'll zoom out to the daily, weekly, and monthly time frame, analyze the market structure. So guys, this was the tweet that I put out 4 days ago, just really outlining that move to the upside as a bit of a bull trap in anticipation for the move. You know, spike up, get the move past the trend line here, bit of manipulation to around the 17,300 zone, and then look out for the move down. And as you can see, if we go back to the chart, we got a bit of a break of the trend line to the upside, 17,350 zone coming into play, and then a move down. So despite this short-term rally, I'm looking for these key levels to come into play next. So I'll take us to the daily time frame now. You can see exactly why I was anticipating this move and what we're looking for in the coming weeks and months. So here we are on the daily time frame now, and as you can see, it was a very similar situation to what we had down here, where we got a wick to the upside, bigger wick to the upside, breaking the level, bigger wick to the upside, breaking the level, but closing below. And then in the coming days, we got more manipulation right above that liquidity level, spikes up. And really, that was the same thing what was getting here with this big bullish candle into the trend line retest, looking to come into this liquidity zone for us to then get that move to the downside, which is why I was really saying I thought that was a bit of a bull trap, get everyone buying at the top of there for us to then move down. So in the short term, would imagine us to come on, fill some of these wicks here for us to then get that move later in the week or in the coming weeks back to the downside, come in and fill some of these liquidation levels of everyone going long at the breakout level here. So that is what I'm looking for on the short term, but really not taking away from the higher time frame stuff. We are bullish in bias, really, in the weekly and monthly time frame. We are bullish, but this is the short term. So you know, if we do get that move to the downside, that would entail set up a nice inverse head and shoulder structure for us to then move to the upside. But I think at the minute, patience is the key. So let me just clear this off the screen because that is getting quite messy at the minute, but I hope that helped in understanding what I was seeing on the shorter time period. Looks a lot better now with that off the screen. So really, another bit of confluence that we've got is if we just take the bottom of that level there to the top of the current range at the minute, you know, often we will get a 618 or at least a 702, 786 retest. So if I just mark out that big zone down here, that would come in and take a lot of the liquidity below this big bullish candle and at the 16,400 zone. Really get a bit of fear into the market. Maybe we possibly something like this, move back up and then come in and come down at these levels. 786 is at around the 15,892 zone, and the 702 at the 1655 zone, 618 around the 16,200 zone. So that really lines up nicely with this trend line to the downside. Can you imagine how much fear would then come back into the market in anticipation of then the inverse head and shoulder structure, which looks a lot better on the weekly time frame? So just going to take us now to the weekly time frame, get a better idea of what's going on the higher time frame. So here we are on the weekly time frame, and just doing the same as what we was doing on the daily time frame here, just analysing the key ranges that we've got set out. And as you can see, from this candle wick to the upside, the key range has been respected really well. Bit of manipulation to the upside and now closing back below. So you can imagine this week, if we do start out the week with a bit of a pump to the upside, let's say we get a wick to the upside right to there, that would set up the head and shoulder structure to the downside. That would then lead us into the movement in the coming weeks to the downside, something a little bit like this. And if you can imagine, if we do get that move to the downside, sorry, not that low, redraw that, get that move to the downside somewhere around the 15,800 to around the 16,000 zone, that would again set up a nice candle wick to the downside. So if you can imagine, in the coming weeks, if we get a nice wick to the downside, something like that, that would then set up the inverse head and shoulder structure for the accumulation for us to then move back to the top of the range, and then finally, as everyone doesn't believe the move to the upside this time, then come in and close some of these liquidation levels above the 20,000 zone. Everyone's stop loss is above there who was short in this big bearish candle. I can imagine the market makers to come in and get that filled. So really zooming out, you guys know, if you're watching the videos, you know my key levels that I've got to the upside, what we're looking out for. This is really short-term stuff, trying to analyze the key ranges. Some people would say it's not really beneficial to analyze the key range, but sometimes on the shorter time period, even though it can be harder and it can be a lot more manipulation on the 4-hourly and on the daily, it is just worth it sometimes, just so you can map out the moves up and the moves down, so you can stay patient and you can stay ready from both sides of the market, and really get ready in anticipation and know that you're going to have to stay patient, because the market really can just keep boring people for as long as it likes. It's going to wind out as many people as it can before the real move. So just keep that in mind before we do get the actual move, whether it's up or down. You know, it doesn't have to go up. I'm not saying it has to any or at all. You know, it's not financial advice, but to me, everything I'm seeing here looks to be setting up for a nice accumulation structure. You know, we might not even have to do it at all, because in reality, we have come and taken this big bearish candle to the downside, taken the wick fishing, and even more wick fishing on the lower time frame. So realistically, if we're putting it out there, we don't have to come down. We're just mapping it out in advance in case we do, because we don't want to get panicked, and we just want to stay patient in this market, because that's all we can do at the minute while we are in this range. So guys, if this video has been useful, let me know in the comments. Let me know what you're doing in the comments, and if you liked it, give it a like. If you didn't like it, give it a dislike and let me know why. I don't mind, guys. But again, from me, it's not financial advice, and I will see you next time. Cheers.